The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We have the S&P is currently down about 10 points. Right now we got the Nasdaq down 21. The Russell is down about 3. Dow's currently down 63 with gold down a little over 7 points. Silver is down almost 1% on the day. We got copper down 2%. Oil is currently down $1.37, almost 1.5% there. We got natural gas is up over 1%. We got corn up 5 points. We got soybeans up 13 points. Euro dollar up only 8. Pound dollar, that's pretty decent moves after last night, down 63 points. Aussie dollar down 88. Euro yen down $1.12. Dollar yen is down 86 pips right there. We got the pound yen down $1.94, so it's definitely leading the way there in the currency pairs. We got the dollar CAD up 89 pips. Massive move there on the dollar CAD with this morning's news. Hopefully you were able to take advantage of some of that. And we have the dollar franc right now. It is down a mere 32 pips. So let's check it all out, and let's walk through some of these markets and, of course, talk about some of the news trades coming up for the week, so you can be ready for that. But we had a lot of news come in over the last 24 hours. So you had multiple opportunities. And we talked about those, of course, last week and earlier on this week on the show. And so I'd just like to review some of those with you. I go through them, multiple times to make sure you have a chance to really know what is out there that you can take advantage of. We have a couple things left this week coming up on Friday. And also you have a potential trade for tomorrow. So I want to hopefully cover all of that if we can during this hour. So, first thing, let's just sort of go backwards here, and let's look at, all right, we'll get rid of this. There we go. And let's first thing just check out the euro dollar, and throw one more thing on there for us. Got these plotted in here already. Okay, that'll make it a lot easier. All right. Actually, let's go and check out Aussie dollar, because last night we had the Aussie dollar report come out, and hopefully you were able to hop in on that trade. It was pretty cool, and I know some people that literally got in on the trade. I was talking to one trader, and was talking about drinking and sleeping on the job. It's pretty funny. He put the trades in before he went to dinner, and entered his trades, entered his take profits. Let him take care of himself. He put in some more trades in the evening before he went to bed. Same thing. Put in the take profits, so it's pretty cool. I mean, these news trades, you don't have to sit there all day. You can literally spend a few minutes, put the trade on, set your take profits, and walk. Or if you want to maximize it, you can stay there longer. But if you just want to have a very simple trade, you just hop in and do it. So what report came out last night on the Aussie? Well, on the Aussie, we had the CPI. The number came in at 1.2 on an expectation of 0.8%. Okay? So 1.2 on an expectation of 0.8%. And, we were saying, hey, if we get a 1.1, then the Aussie should definitely fly on up and hit our take profits. Okay? So that was the, I was hoping it would break 1.1. It did. And it hit 1.2. So we got all the movement we needed right there. And let's go ahead and we'll just check that out. See, how did that all play out for us? Right here. Okay, so when the report came out, like I said, that report was released right over here at 8 o'clock. I'm sorry, 8:30. And so right there, this is the low. So it came down a few ticks right when it came out. And then it spiked all the way up to here. Got a solid 52 pips, high to low. What was the expectation I talked about right at the end of the day on the trade there? Well, yesterday when I was talking about the trade, I went into it and I said we have an expectation of 50 pips. Remember, I said 75% of the time the Aussie moves 50 pips, but the average move is 50 pips. And we would have got 52. So it worked out great if you're able to go in and do this trade. Like I said, you would have had a nice profit, and I can sort of go through sort of what you may have done well, if you're looking at this trade last night, you could have hopped in here and you could have put on a couple of spreads. So right here, we look at it, and we got a 95.10 to 97.10. So that'd be the one we sold. Way down here. So tons of room. Way more than obviously than needed, but 95.10 to 97.10. There we go. Okay. And then, of course, we got one that we bought, and that one was 97.10 to 99.10. So right there, and went way up here. So tons of room for profit. Obviously, way more than needed, but plenty of time as well on that trade. So you had plenty of time for it to develop out, and that was using the 11 o'clock expiration. Okay, so taking you all the way here to 2,300 hours there, and take this one all the way over. So that's how much time you had for it to play out on the trade. You could have put the trade on for about $20 risk, literally, about $11 on the buy, $9 on the sell. And so no matter what, you should have literally no issue have taking your 50% profit or your 1-to-1, 100% profit, and maybe even maxing that out even further. Because, like I said, as it flew up there, we got to the high up here, about 97.53, and your ideal profit would have been set right around 9750. So that's where I had a bunch of traders that sent me some screenshots on trades that they did, and I saw a variety of exits. But by doing that, if you're risking, basically $10 on both sides, then what you're looking at on a trade is a $20 risk. So it's 11 on one, 9 on the other, basically $10 on both sides. And so if you end up, getting a $30 profit, then that covered the $20 in risk, plus it covered another $10 in risk. So, like I said, could have worked out really well for you, depending upon exactly what price you got out at. But no matter what, you should have been profitable on this trade. And you could have entered it as early as 6 o'clock. So it's not like you had to wait around until 8:30 to put the trade on. The market's open at 6. And if you see a good, straddle, where it's right on the line, with a low risk within, the risk requirement of what you'd need for, say, a 1-to-1 or whatever, then, there's no reason not to hop in on the trade and get the trade going. And again, to find, how do I find a good straddle? So you just hop over here on the Nadex scanner and, put in like a $50 risk, maybe a 1-to-1 on the risk reward here. You choose your market. So in this case, you would have been choosing like the Aussie, okay? And then you scroll down here and you find ones that line up with the floor and the ceiling. So if you had, let's see here if we can find a couple that line up for us, like right there and right there. So that's an example of a straddle. There's a little wider straddle for you. So happening at that moment. And when you're looking at them, of course, just like right now, one of the things I want you to really always be cognizant of, because if you're just inside the Nadex platform, you're not going to see this, okay? Unless you're clicking around a whole bunch, is we have multiple expirations at the same time. And look, the exact same risk, the exact same timed expiration, the exact same break-even distance. So like right there, both of those. Right here, both of these. But notice how they're narrower, okay? Because these started at 1 o'clock, and these started right here at 7 a.m. So if you understand that, if you'll go in and you'll use these trades that have the same risk-reward scenarios and everything else, you can get, obviously, some really good trades, but also you're getting the best trade. And maybe it matters, maybe it doesn't, but sometimes, especially if you're staying in that trade, it could definitely, make a big difference in your profits. And sometimes, you may find one cheaper. You may find one, in my view, if I can get more time or more profit without increasing my risk, then there is absolutely no reason for me not to do that. And the scanner helps me see out of all the possible opportunities, because that can be the one thing that I'll definitely say can easily be overwhelming on Nadex, is there can be so many different trading opportunities that you can get a little overwhelmed, okay? And, you may even get a little overwhelmed sometimes looking at the scanner, okay? At first, you're just like, when you first look at it, it can be like, all these numbers and details and data and everything else. But once you get used to it, And, I mean, it's a lot easier to get used to this right here than it is to go in and get used to the platform, because the platform, no matter how used to it you get, you're still going to have to be clicking around and doing math in your head versus having all of it done for you. And what do I mean by that? Well, let me, here, I'll log in over here to my demo platform. I'll show you exactly what I'm talking about on this, because I want you to get this concept down. Because what you want to do is you want to be able to make decisions. You want to be able to get all the information given to you as quickly as possible so you can make a decision as quickly as possible. Not guessing, not estimating. You know, I mean, if you guess or estimate and that costs you $5 on 10 contracts, that's $50. If you did that 10 times in a month, that's $500. So it can easily add up. So let's look at this right here. You go over here and you look at Forex spreads. Then you look at Aussie dollar. Well, now you got the 2 o'clock, the 3 o'clock, the 3 o'clock, and the 3 o'clock. So you got the master spread right there. And you may go, okay, I know I want 3 o'clock. So let's just say you know. Maybe you don't. Maybe there's a better one. But let's just say you know you want 3 o'clock. And so now you got to hop over here and click on this to see your max risk reward. You got to hop over here. You got to click on this to see your max risk reward. Or, and by the way, you have to enter the quantity as well. So, or you got to do it in your head, which isn't that hard, but you know, you start adding in more and more and more contracts, a lot of math starts adding up, and you know, honestly, I want to trade the charts, I want to put my plan, I want to execute it, and I want to walk away. So by doing this, I can literally hop on here. I'll do this on my cell phone. I'll hop on and look at the scanner on my phone. Now I have to enter the orders, okay, obviously on the Nadex platform if I'm on my phone, but the Nadex platform has a Nadex app on the Windows phone, the iPhone, the Android that you can use, and so I'll just hop on the platform. I'll go, okay, I want the 3 o'clocks. Okay, I want the dailies. They're 200 points wide there. And sweet, I want the this one and this one. And then I'll hop over to the platform real quick, and I'll like I said, the Nadex app, put the orders in, and I'm done. And you know, like last night, going out with my wife, you know, I can do trades. Yesterday morning, I was, you know, I took my daughter to school, so did some trades there. And you could also do them during the day. So it doesn't matter if, you know, you're a parent taking your kids to school, you know, or if you have evening plans, or if you have a job, you know, during the day, etc. You can still do this remotely. It's just you need to, you know, obviously get a little better at it, a little practice. But you know, we have the videos, we have the education. You got a demo account, you got free trials on everything, so it's definitely worth your time to figure it out. You know, I have some traders that will sit there and they'll trade for 8 hours. I have other traders that literally they spend an hour a day and that's it. That's the hour they have. Some people, you know, they only spend 30 minutes. They put the trades on and they're done and they walk away. So it just really depends upon your schedule, how much you want to trade, how much you want to get into, how much you want to learn, how much you can do. You know, all these are different things, but, you know, some people I know just trade the news. And weeks there's some weeks like this week they have a lot of trades. There's other weeks they don't have many. But when they do have them, you know, they knock them out. All right, well, stay there. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So right here, let's check this out. I just went through the Aussie dollar. You could have and bought this one, sold this one. You could have easily made at least, like I said, a 0.5 or a 1-to-1, and it perfectly hit our 50 pip take profit price level that we were shooting for. Also came right up on that deviation level. So right over here, as you can see, came on up, hit 0.7, almost to 0.1, and so got very close. But again, was within our 50 pips. So we want to really respect the stats of historic movement because that can be very helpful. And, setting take profits. So, anyways, hopefully you were, like I said, able to hop in on that one. And right now, just to do a quick review on the Aussie dollar. So, after that move up, the Aussie saw a massive decline, fell on down. Now it's down actually 2 deviations on the day. So, just a really, really big drop there in the Aussie dollar. And, what's cool is we made money on the one-up move there was. Doing that straddle, you would have made some money on it right there. All right, so let's go over. Let's check out the pound, because this was a little bit interesting, okay? The number came out last night, the CPI, and let me pull that up real quick on my other screen here. So, so we had not the CPI, the facility purchase votes. So the number was released last night at 4:30. And on this trade, like I said, it comes out at 4:30 in the morning. So most people, of course, aren't up. At least I'm not up placing that trade that early in the morning. And but you can get into them as early as 11 o'clock. okay? And even the binaries are open as early as 8 a.m. the previous day. There wasn't any expectation in the change. And we have about a 50 pip move with up to 80 pips within 2 hours. So like 90% of the time we got a 50 pip move. So let's check this out, because this time we had this big move, this drop down that started last night, sort of affected all the currency pairs, and started coming on down. So we already had literally a full deviation move before the news even came out. That might be a little bit of a warning to you to be careful on a news trade. Okay, so just something that I was talking to a trader, and we were saying, hey, that might be something to be aware of. If the market's already moved a full deviation before the news comes out, that could, of course, stunt the impact a little bit on that news. But let's look at it. So we go over here, and just before the news, so right there, and let's check the high. So we got our high right here. And then we'll go over here to the low. Okay, so we get a low right there. We got about 59 pips. I might need to back that up to make it a 2-hour stat. I got a little bit less than that. So there we go. We got 47 pips. Now remember, 90% of the time we do get that 50 pips. So that's sort of what we're expecting, is that we are going to get that 50 pips. We basically got that 50 pips from the news release right there. And it says 2 hours and 5 minutes, but I have it plotted earlier, so if we move it back, it'll be a little bit different. If I go in here and I grab this and, do that. But so we got very close to the 50 pip mark. The problem is the price went up right here. Okay? Part of those pips. Like 17. And then the price went down part of those pips. You have to take it all the way to, say the 7 o'clock, because that's really as far as you could have taken it. So you had till 7. And that's one thing, I want to point out. That's why I like doing the longer term when I can, the longer term expiration. So we got 7. If we put it right on the 7 o'clock mark, we got 58 pips at 7. So you got 40 pips down, you had 17 pips up, and you probably had somewhere between a $30 and maybe a $40 risk on the trade, depending upon what time you got in. Now, I had traders hopping in last night. I got multiple examples of traders hopping in. Here's one example. I thought was a really good one. Let's see if I can pull it up here. If I can get some of these on my screen for you, I'll show them to you. And traders will send me some of the trades that they did on the news trades that I talk about. So this trader got in. We can see they got in it was right past midnight. Okay? And so they were able to get in for, pretty good risk right there. We got a $13. They did, they did 10 contracts. $13 on this one. They did $25 on this one. So 13 plus 25 would have put them at what? So, I would have put them at 38. So $38 risk on the trade. My max risk on the trade was $45, so it was within that max risk. I had some other traders that hopped in, did a variety of, different ones. Let's see here if we can find. Let's see, there's some dollar CAD ones. We'll talk about that. This trader hopped in early. They put one of the take profits, didn't get all of them put in right where they needed them, but they got in about the same time. I put those in 62.31 there. Let's see, and this trader, like I said, put them in at 62.63, even higher. And so they were able to get in quite a few trades, binaries and strangles. So we'll go over what this trader did. And shout out to Esteban there. Good job. And walk through it. All right, stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So right here what we got is we have Esteban's trades here. He sent me over his pound-dollar trades that he did last night. And did a great job on them. He put on straddles and strangles, so did both of them. And so we'll walk through each one of these. He took profits on these and everything and put them all in there. So let's walk through it. Let's look at what he did. Now, if you waited till right before the news, could have been pretty rough. Also, if you got in like at 4 o'clock, you could have extended that a little bit more. What happened on this one was there was basically just some really good trades that were well within the risk requirement that could have been entered in the evening. And a lot of times you have the, and me and Esteban were even talking about this, the London breakout session, And so a lot of times you can get a movement that may happen previous to a news release. And we did. So we had, this was even more than the London breakout, because right here we had, all this happening, starting as early as 11 o'clock. The market has turned around and started heading on down. So anyway, so he heads in, he hops in the market right over here and is really able to hop in and take advantage of this because he gets in at midnight, okay? So just 20 minutes past there, hops in, and he does these 7 a.m. spreads. And the ones he does 62.50 to 65.50. So, I mean, they're way up here. So right there, okay? And let's see. All right. And then he goes in, he does the lower section right here. He goes in, he does the 62.50 down to 59.50. So he sells that spread right there. Okay? So he's got those two. And when he hops in, he buys this one, the 62.50 he gets into it for 62.63. So remember, the risk on a trade when you're buying on a spread is the difference between where you buy and the floor. So if the floor is 62.50 and you buy at 62.63, the most you can lose on that trade is $13. And so he goes in, he risks $13 on one side. So over here on the upper side. And then he goes in and he looks at the lower one. And the risk on this trade is he goes and he sells the 62.50 for 62.25. So there's $25 risk on that side. So his total risk on the trade is $38. Well, then what happens is, of course, the market drops, and he's actually able to take profit before the news even comes out because the pound dollar was just heading down, basically all during the early morning hours there. So he didn't have to even wait on the news. He was doing it based on the news. And if you did the news trade, you probably either made a little, broke even, lost a little if you got in, say, at 4 or something, okay, or 4.15. But since he went in and he looked at it, he saw, hey, you know what, this is within the risk-reward requirement. I don't want to stay up till 4.30. I'm going to put this thing on. I'm going to set my take profits. He was profitable even before it came out. And so he put the trade on. He probably could have made more if he was up, but you know what? Sleep is pretty valuable too, right? So he went in here and he sold, okay, at 1.6225, and then he did a buyback at, looks like 1.6225, and a buyback at 1.6184. So he made $41 on a $38 risk, so just above the 1-to-1 there. And so with a $41 profit. So not bad at all because he covered the loss on the other side, plus he made the total risk and, brought in just a great profit on the trade. He also, in addition to doing this trade, he went in and, for experimentation, threw on some binaries. Okay, and he did a binary strangle at the same time. And on the binary strangle, he went in and he bought the upper one for $9, okay? And he bought the 6,300, and he sold the lower one for, it's like 86.5, okay? And, so sold it for 86.5, and let's see here. Just want to make sure I got the right numbers. Yep. Which would have been, you just do 100 minus 86.5, that's the actual risk on the trade, okay? 1350. So if you add that to 9, you had a 2250 risk. One thing you'll notice is that strangles often have lower risk than binaries. Strangle binaries often have lower risk than spread straddles. But the disadvantage is it does have to move for you to be profitable on the trade. Anyway, so he risked $22.50 on that. And then, of course, the market drops. So he sells the 61.60, which it obviously went well below that. But he sells the 61.60 for $86.50. And then he ends up buying it back for $64. Which put him right out of 1-to-1. He didn't even wait for it to get to the strike. So he's like, hey, you know what? I got a very conservative plan. My target is 1-to-1. That's what I'm putting in. And he put that in. Market dropped down. And he was easily able to get filled. Even though all that time had passed, it didn't matter because he knew, hey, if it gets down to this price, I'm at least getting 50. But, I just want 1-to-1, and I'll be happy on this. And so I was able to go in and, take that profit. And so he made $22.50 on a risk of $22.50. So, again, great job there. Just doing a simple pound dollar straddle and strangle before he goes to bed, setting take profits, and waking up to an increased account balance there. So pretty sweet. And, of course, you can do these in your demo. You can do them in your live. You want to get them down in your demo just to make the mistakes for free. But they're pretty sweet trades. So what else did we have? Well, we had another one this morning. So a lot of news. We had the dollar CAD report come out. So let's check out the dollar CAD over here. And I'll show you that one. And but it's pretty cool. So again, like I said, just a lot of trades. I'm trying to let me pull up one of my examples on dollar CAD because I had multiple traders sending me in different examples. And let's see here. Yeah, let's see. I know I have a dollar CAD one. I'm liking to. It's really cool whenever I can show them from other traders doing them versus just me. Let's see here. Okay, there we go. Got that one, and that one. getting in on here. Look, on the dollar CAD, I actually have a couple of them, so this will be pretty cool. Here's one image. Oh, that's the Aussie dollar. That's another trader who did the Aussie dollar last night. So you can see Osterman did that one as well. Did great on it, so good job. He did the same thing. He did straddles and strangles, go in and took his profit. So awesome. Way to go, man. And Mark, he did a bunch of trades as well. I know Steven did a bunch, and I'm trying to pull up a few examples to get them all in here. But it's pretty. I like seeing the different trades that people are doing, how they're putting them together, and the trades of traders going, hey, I'm not getting up that early to trade the pound dollar, but I'll definitely put that trade on and take advantage of it. This is one trader did on a strangle right here. So this one that Mark did. And what he did on this one is he went in, he bought for 99, he sold for 90, put his take profit in when it hit the price. He had a total risk of $38, okay? So, and then he got a payout there, a deposit of 86. So 86 minus 38. So $48 profit on that one. So if you combine them all together, you can get all the different profits. And we could go through all the math, but the bottom line is he bought an upper one, he sold a lower one, and he bought back and sold back the one he bought at a much higher price. And as it kept going up, obviously a lot of profits in there. I know traders that went in, they pulled out the full 3 deviation move. And check this out right here on the CAD. Not only do we have that move, but right here, but it literally went we got a 3 deviation spike after this move here. We got a full 3 deviations. I mean, it just flew up. And these trades were put on. It's pretty cool. You literally see these trades went in there, and they were taken before the entire move even happened on some of them. So let's see here. We got one of them where he had a set take profit at 43. So let's see here. He bought the 1.0340, and it took profit at 3:51 in the morning for $43. Okay. And then he went in, he got another one that took profit, 1.0360. He got to that trade, it's like at 9 a.m. And then took profit on that one right there at 10 o'clock. So pretty cool, got into that trade for the news announcement. So he basically did one, and then he did another one this morning after he basically used some of the profit to put on another trade. And so it really wasn't costing him anything. He was using the house's money, as we like to call it sometimes. Not necessarily the best way to look at it, but it's pretty funny. But he went and did that perfectly. And so as it shot up, took on another, great profit on the trade. And I see traders going in for the big profits. I see traders going in for, 50%. I see traders going for 1-to-1. My favorite way is to layer it. So I'll do like a 50%, a 1-to-1, and then I'll have another one or several of them that I'll be letting run. If I see it really moving. If I see it just barely moving, or based on how the report comes out and based on the deviation levels and things like that, I may be a little bit more careful. It sort of depends on how everything's coming out. But it was, the rate statement, the overnight rate, that's a big announcement. That's their Fed fund rate, and so the market just took off based on the statement that was made, and they basically in their report they dropped their bias to lift the 1% policy rate. And so in doing so, that weakened the CAD, and that's why you saw the dollar CAD fly up. So that was what's in their policy report from this morning. But anyway, some pretty cool trades. Like I said, straddles, strangles, both did very well. I got a lot of good reports from a lot of different traders doing both of them. And let's see here. Maybe I can find a couple more examples. But I think that's most of the ones that I have from screenshots from this morning from different traders on those different trades. So I was just trying to see if I had I know I had some straddles somewhere too, if I can find them. But there's so many of them that come in, it's sort of hard to keep up with all of them. But that's good. So I love it. So yeah, if you're doing these trades, you can definitely share them with me. I'd be glad to share them on air, talk about them, walk through them, and give you tips or tricks or kudos or whatever. So, but anyways, great job to all you traders out there, putting this into practice and planning the trade and trading the plan. So let's talk about what do we have coming up. So what are some of the news announcements that are remaining for the rest of this week that you might be able to do a trade on? Well, tomorrow, okay, we have, let's see here, a binary butterfly into the news. And this one's a little bit different. So this is where we're, instead of buying a strangle where we're buying a binary above the market and a binary below the market. We're going to go in and we're going to buy a binary above the market and sell a binary below the market. So it's basically inverted. So instead of like buying the $9 one, you're buying the $90 one. Okay, so you're inverting it because you're saying it'll stay within a range. What we're looking at is two different potential pairs for this trade. The reason we're able to do this is because the announcement comes out right. Let's see here. I want to get all the facts and details for you. But tomorrow morning, the announcement's going to come out at 8:30, I believe, on one of these reports. We got trade balance, and then we got 10 a.m. We have the JOLTS report. So if you're going to do a full into the news, you can do it before the news or into the news. Both the numbers come in pretty low, okay? And you just go in and you go, okay, well, what are my ranges? If I want to know all the different ranges, all the different possibilities, what are my ranges for doing this trade? Well, since the trade comes out at 10, you can do expiring at the news, or you could trade into the news because it really doesn't move that far once the actual news announcement comes out on certain pairs. Okay? And so the ones that we'd be looking at, usually I'm going to be looking at like dollar yen or Aussie dollar on this report for the one that I want to trade. And the reason is due to the the volatility and everything else, and how much it moves before the news and after the news. But the dollar yen, going into about an hour before the news is 30 pips. And then 60 minutes before the news moves about 25 pips. 30 minutes before the news moves about 15 pips. After the news, it moves a little over 30 pips. So about 38 pips or so. So right there, like after the news, like for 2 hours, high to low. And it hasn't broken 50 pips in the last 2 years. So that's sort of my favored one for post news trading, because it doesn't have a history of really even when it does go high, it doesn't go that high. So dollar yen is my into the news, which would be like an 11 o'clock expiration, okay, on the dollar yen. Now you could go in, like I said, do before the news. I just listed off, 30 pips, 25 pips, 15 pips on the dollar yen. You could also do Aussie dollar before the news, 30 pips, 25 and 15, basically the same stats. I mean, give or take a couple ticks. Where you're going in and doing a butterfly. So you could do a butterfly before the news on Aussie dollar. You could do a butterfly before the news on dollar yen. That expires at 10. So again, we're going to buy a binary below the market, saying it's going to stay above it. We're going to sell a binary above the market, saying it's going to stay below it. And so it'll stay in that range. So if you're doing this on, say, the dollar yen tomorrow, what would you do? How would you do this butterfly? How would you walk through it? Okay? Well, what you do is, obviously, pull up your dollar yen chart, but also you're going to need to pull up the scanner, so that way you can easily find the best trades. And you'll flip over here to the binary scanner, right there. And then you'll want to put in a risk reward. I usually do 65 to 95 whenever I'm looking for butterflies or EPC trades, like that. And you may want to even reset all your filters, because you may have other filters. You could mess things up. So, like 65 to 95. And then you want to be very specific. If I want this thing to expire at a certain time, I need to select that. So we'll go into, actually selecting that butterfly for before or into the news when we get back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. So right now what I'm doing is I'm going in and diving into the binary scanner, talking about binary butterflies before the news. And just talking about doing the dollar, yen, or Aussie dollar either at the 10 o'clock expiration or into the news. Now, if you do into the news, you're holding on to this thing basically till expiration, except for you can take profits, okay? You're expecting a spike. It may hit your strike, but come on back down. So into the news, butterflies, we don't exit right when it hits the strike. Anyways, you want to make sure that it's showing the correct expiration, so you're focusing on the right one. And so like if I want the 2 o'clock, I'm going to have to expand it out. Let's see here. So if we're looking at, say, dollar, yen, and I can even look at Aussie dollar at the same time without having to switch screens, which is a nice benefit. And then I go in and say, on this example, I would, let's say if 2 o'clock was my expiration, or 3 o'clock was my expiration I was looking for. Of course, it'll be either 10 a.m. tomorrow or it'll be 11 a.m. tomorrow. But I could say, sell the 18 and buy the 75. Now, if I'm doing before the news, the up to the 10 a.m., I'll exit if it hits my strike. If I'm doing into the news, I'm just going to leave it alone if I'm doing the one that expires at 11 a.m. And so right there you got those. I mean, you even got the 11 a.m.s even are happening like right now, but the stats that we have are based on, okay, again, those stats are based on the expectation of the movement 2 hours after the news, not necessarily 23 hours in advance. But so we'd look in here, we'd find that expiration time and simply sell one above, buy one below, looking to get about $15 on both sides of the trade. So, trying to bring in about a net $30 profit or higher. Not trying to get too close. I want to get as far away as I can, with the right profit. So, and you can see how these things will definitely change value very fast, which is good. And if I can, then I could even, potentially set a take profit on that trade as it oscillates up and down. But I'd do that on the Aussie, then I'd scroll on down and check out the yen, and then I'd find the right one for that. So, of course, tomorrow morning I'd be looking at the 11 o'clocks. And like right now, you can do 97.60 by, 96.80, and you're getting right there at $33, so not bad at all. And if you're getting more than that, but if you're getting more than 40, you're probably definitely going too close. But you might even be able to get closer, but I'd rather give up a few bucks and have a higher probability of being profitable. And like this right here, this is a pretty wide spread. I mean, at the moment, this would be 80 pips wide, but this is all the way till 11 a.m. tomorrow, so I'm not quite sure I'd want to hop in this trade just yet. Again, we usually look at doing the binary butterflies. I'm looking at doing 90 minutes before, 60 minutes before, 30 minutes before, and then the butterflies into the news. I'm usually getting in literally like 15 minutes before, and then going to the next expiration. So if the news comes out at 10, I'm looking at the expiration of 11. Anyway, so that's the trade for tomorrow on the news report. We'll have another trade that we'll be able to talk about as well on tomorrow's show. I'm going to go into a little more detail on that one. But we'll be talking about how to trade the UK preliminary GDP, usually a big market mover. And we'll also go into a potential trade. This will be a really low risk. I'd probably recommend demo trading it. Just a little 5-minute strangle on the consumer sentiment report. So a very short trade. But we'll talk about the pound dollar one and get all those details wrapped up so you'll be all set for the news as it comes out. Of course, tomorrow we also have the German flash manufacturing PMI and the Euro flash PMI coming out at 3:30. That'll cause, of course, some volatility in the euro there, about 20, 30 pips, unless it's just a majorly off number. And then we got the U.S. unemployment claims and trade balance coming in 8:15, 8:20, 8:30. So there's multiple reports coming out right there. So expect that to have a little volatility, not as big. And Bank of England Governor Carney's going to be giving a little speech tomorrow at 12:45 as well. And let's do a quick wrap. Let's check out the oil markets since we had the oil inventory numbers come out today. The numbers were released. And we saw pretty decent bounce right there off the numbers. But we had 5.2 on 2.7. Inventory was up. Price was up. So not the usual expectation there. So I'd be very leery in trading oil at all with something like that's happening. All right. Y'all have a great day. Stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.